And we'll be back from the break. You're still watching Smart Means Business. This is your morning kickstarter. We start this hour now with what is coming in from the motivation perspective, and of course we inspire you and motivate you to kickstart off your day. How we do it, we start with our business tip though. The business tip says your journey, your time is limited. So don't waste it living someone else's life. Don't be trapped by dogma, which is living with the results of other people's thinking. Don't let the noise of others' opinions drown out your own inner voice. And most important, have the courage to follow your heart and intuition. They somehow already know what you really want to become. Everything else is secondary. So your time is limited. So don't waste it living someone else's life. Don't be trapped by dogma, which is living with the result of other people's thinking. Don't let the noise of others' opinions drown out your own inner voice. And almost important, have the courage to follow your heart and intuition, because they somehow already know what you really want to become. Everything else is secondary in there. That is according to what the tip is saying. And so don't limit yourself to what is happening to you. And of course, that is the business tip this particular morning. Now, besides that, let's get our business quote of the morning as well. Bill Gates says that your most unhappy customers are your greatest source of learning. So you should be able to treasure those customers of yours, because by the look of things, when your customer is unhappy, they are your greatest source of learning. The same applies to, should I say, businesses that offer services, because your customer is your boss. So when your customer is not happy about the service you're rendering, you have to work on that service and make sure that, at least in the simplest way possible, they can easily be happy at the end of the day. So that is the business quote telling us that your most unhappy customers are your greatest source of learning. So treasure them and take it on. And okay, obviously now, away from that, let's continue with more business updates as they're coming up this morning. Now, the other issue that we have is rotating around the dollar shortage in the East African states, because financial markets have been largely affected by this particular crisis, and the central bank is increasing the shilling rate to counteract the dollar rates, according to the latest findings in there. Now, in this particular update, we still have Charles Katongole Mbide, who is the head of financial markets at Standard Chartered Bank, giving us more reasons as to why this has happened, how to deal with it, and of course why those in the market should be very cautious as they continue to do business. Let's have it.
During that period, at the peak, early March, you saw a lot of turmoil. The dollar, being a safe haven currency, started strengthening against other currencies, and we've also seen that here. Over the last month, I think the shilling has lost close to about 40 shillings. We're now trading at about 3,750, having entered into, they are just shy of 3,710. So you notice that even us here, we do get impacted once you get such global events happening. So the shilling has weakened. Part of it is cyclic, but you also get these global events playing into it. What does that mean? That means that potentially also, because a good chunk of what we consume is imported, that means that the prices go up. So that poses an additional challenge for the central bank in terms of managing inflation. Yeah, because of what's been happening, there are also concerns about the Fed's action, whether the Fed will continue tightening monetary policy as they try to rein in inflation in the US. There is a Fed meeting today, an announcement that we should expect. I think the general expectation is that they'll probably cut back. Initially, the call was for a 50 basis point rise in interest rates in the Fed fund rate. That's probably now lower to 25. And the views now within the market are probably we are reaching the end of that rate hiking cycle. and that then has some added benefit for us. You recall that part of the flows that we've been seeing are from offshore investors who have, since the start of the rate hiking cycle, withdrawn. They're not putting in as much money in economies like ours because their economy, where they're coming from, the US and the West, is yielding just as high or significantly higher than where they were previously. So once we reach the end, or we're getting to that end of the Fed hiking cycle, which the market seems to be anticipating, we could potentially see offshores come back in. If offshores come back in, that's increased supply of forex on our side, which would be good, and increased capital flowing into the market. The other impact is on commodity prices. As a result of that volatility, we saw actually oil come off. Global oil prices, oil has dropped from around $84 a barrel to about $74 a barrel, and that's good for us because remember, one of our largest component of the import bill is fuel. So if oil prices drop, then we could see that filter through as a result of that risk off and anticipated recession kicking in as well. And then finally, interest rates that we also need to look at. As we said, if we're reaching the end of that hiking cycle, then chances as well would expect the central bank, as inflation continues to ease, and based on the data, that we could also probably be getting to the point or starting to see on the horizon a drop in interest rates, even in Uganda as well, which means that you can borrow cheaper and then deploy that capital, or credit extension would probably improve and we see growth again. Let's look at the reserve situation. As a result of rising inflation globally, the Fed hiked interest rates. If you remember, the Fed fund rate was near zero. They've pushed that up to 4.75 as we speak today. As I've said today, I think there's an announcement and we expect an additional 25 points. So that's going to probably get to 5%. So they've increased interest rates, 5% over, I think, probably in less than 12 months. That has an impact on the world economy, the US being the largest supplier of liquidity, but also the largest trade partner. So as a result of that, you've seen flows leave our economies.
Of course, now, by the look of things, the Tanzanian President Samia Suluhu Hassan just 2 weeks back broached a subject that has been quite uncomfortable for East African state economists and government officials, which was when she highlighted something to do with the shortage of dollars. In having to calm the juntas in Tanzania, the economy was suffering hard hits from drought, inflation, rising debt, and potential weakening of the local currency. Now we are looking at it from the East African perspective. Of course, when you look at the other issue was President Samia Suluhu Hassan during that time said that Tanzania has foreign currency reserves that can last for last month. But if they are to go to their neighbors, they don't even have reserves to last a week. So those are statements where she was actually hinting on Kenya, who was actually, because Kenya was now getting dollars, was actually going to get dollars from Tanzania. So this was actually referring to Kenya directly, where the dollar shortage continues to bite the shilling, and of course the shilling of Kenya continues to fall now. But the Kenyan Central Bank did say that it has an import cover of 3.7 months for the dollar. And of course, Kenyan executives continue to state that sourcing dollars from neighboring countries, especially Tanzania, was the only alternative they had. But also, President Samia Suluhu Hassan declared such overtures as she showed up her own reserves, which at 4 months still fall short of the standard 4.5 months of import cover. And the demand of forex has as well shot through the roof in recent months as the importers seek more dollars to finance imports, owing to higher global prices of fuel, food, cooking, oil, steel, among other imports. But of course, now by the look of things, this does not only stem from the African continent, it stems right direct from the international banking bodies. in the international updates, we talked deeper and understood what the crisis of the Credit Suisse means to Africa. But not only that, though, now there's also something to do with the federal bank in the United States. Then details to do with Signature Bank. There is something to do with the Silicon Valley. So there are lots of things that are building up to this entire crisis that is eating up the East African community. But besides that, Barigye Andrew now does join us this morning as we continue to dig deeper and understand what this means and why it is something of a huge concern to the Ugandan traders. Good morning, Andrew.
Very good morning. How are you doing?
I'm okay.
Yeah.
So by the look of things here, the dollar shortage continues to bite the East African states now.
Yeah, and in most cases, when we look at the financial market side, I think, in my opinion, this is why we call for some sort of an integration of, having either like continental, having markets integrated in a way whereby as Africa we can have a joint currency. If you have to compare, for example, the European zone, if we had to look at the meltdown that happened, that was in 2008, regions which have that joint currencies, in most cases, you're not really affected because the dollar being a reserve currency for almost, for most of the nations. But then when you have a currency that can a little bit counteract with the dollar in terms of transaction, that can be something very, very amazing, and it can act like a proof, to a financial proof from such a crisis. Now looking at what's happening in the Silicon Valley, that shortage, the risk which the bank took, and it's all now coming back in here to Africa. But still, I would still think of this entire aspect of, for example, like I told you, in the financial meltdown of 2008, okay, countries which had a joint, a joint currency didn't really feel the pinch as such, because why? The central banks in those countries did whatever it takes to ensure that they erase the interest rates of their local currencies and counteract the dollar. The same is happening in here. In Uganda, the central bank is raising the bank rate, is increasing its bank rate, whereby the shilling, it's some sort of like they call it a retaliation, towards what's happening about the dollar shortage, and I think that is something very good. But I think it should. I imagine if we had one currency, a common currency, and we have a central bank that speaks for that entire currency, like how you see the Central Bank of Europe, it can determine the euro, that despite the fact that the dollar can be really trying to be a little bit competitive, but there is that counteraction for forex traders. You always see that, for example, those that trade the euro USD. It's one of the most competitive exchange rates there. You can find that there are times whereby the euro really shoots up so high against the dollar, and there are times that there is some sort of of course there is some sort of a competition, but you find that it's a friendly competition in terms of rising and shooting up, going down and all that. But it would be so unfair for now, like the Ugandan shilling versus the dollar. It's always it's always weakening. The shilling is always weakening in that perspective. Why? Because it doesn't have those backup currencies. It's standing on its own as a country, and that comes back to the people that are trading in those financial markets locally. Some of them probably they don't even make the anticipated profits, and as a result, why? Yes, the force that the Central Bank of Uganda can try to put against the shilling, because looking about the dollar shortage, how about we also strengthen our shilling, whereby, to also get our shilling, you need to, the dollars used to have before to get our shilling now have to increase as compared to what you had before, that whole aspect. But it would be very interesting if we had that uniqueness, that joint sort of a currency, and we have a central bank that commands that currency within the region. It could be the East African region, it could be the African region.
Very true.
But that can be something very good. And despite the meltdown that happens in there, countries which are still relying on the dollars, the reserve currency, won't stand it. Do you know that actually there is a country, I think it's called, it has one of the most valuable. I think it's Kuwait. One Kuwait, forgotten what they call their money, but you find that you might spend about 10,000 to get just one note of theirs. 10,000 Ugandan shillings. So you cannot tell me that a country like Kuwait, I think it's Kuwait, I'll search more about it, a country like Kuwait can really suffer out of this, because you may find that you might need about a maximum of probably $2 to get one Kuwait. So such a currency can really counteract really to some sort of a competitive level, unlike the shilling where it is. So we should target all that. But why all that? Because different. You see, like how you see the Scandinavian region. Okay. Despite the fact that yes, it's all in Europe, but within those regions, people know that sometimes due to economic interests, as businesses grow within the region, some countries tend to become selfish over financial gains. So still within those regions, there are always sub-regions within those regions. Now you can hear the Scandinavian region, where you see the countries like Norway, Sweden, and they have their sort of, there is a way there, and actually if you are to look into some of their local currencies, there is a way they interrelate with each other, and sort of, why, to counteract such economic catastrophes which are unforeseen, which might happen, and it's very interesting that the greedy parties are the ones that face it the most.
Okay.
In most cases.
And of course, by the look of things here, the Kenyan economy, which is East Africa's most dynamic economy, is facing the biggest share of what you could call the shortage of dollars. And most fuel and oil importers in the country cannot import the commodities because of the dip in the supply of foreign currency. And in the long run, it has actually led to fuel shortages in major places around the country, especially the capital of Nairobi, where motorists keep on lining up, to get fuel. But the kind of situation, the dip in Kenya's foreign exchange is being blamed for the current crunch hitting Kenyan consumers. The first to feel the pain, for example, from the Kenyan perspective, because this is where the biggest point of discussion has always been hitting in the past few weeks. The first to feel the pain are traders and the motorists trying to fill up. Of course, and then Kenya's oil and fuel importers use US dollars to buy fuel, if you're to look at this. So the forex shortage has had a direct impact on the company's fuel supplies. And by extension, the country's supply chain is also affected. And it also has impacted essential imports such as medicine and food, because these imports actually bought using foreign exchange or using foreign currency, especially the US dollar. So with insufficient hard currency, both major and small scale traders claim they cannot import goods because there is insufficient hard US dollars to buy these particular imported goods. So this is again affecting or pinching hard on the Kenyan traders and of course the local entities in Kenya. So in the long run, you will see it is affecting the entire value chain, and this time around the traders and the motorists are feeling the bite. But by the look of things here, according to all these warnings, of course this is actually affecting the entire African countries. The African countries mainly, for example, from the East African scale, for the countries that import goods. And because importation normally, I think just a week ago, Tanzania and India agreed that for them they will do business using their own currencies. So the exchange of goods and everything will be done by their own the currencies between the two. So the Tanzanian shilling and of course the Indian rupee.
So that means if Indians
while trading,
when trading, will love to get Tanzanian money to trade, and then they also getting the Indian currency. Because
I think they are trying to at least try to cut short of this same kind of situation and even make trade more easier for them. I think instead of using the other, let's say, independent US dollar in there, because of this entire dollar shortage kind of thing. So I think if I don't know if Kenya can actually also pull in for that, but again it depends on the power of the currencies, and the level of relations between the two countries, because India and Tanzania have got some good relationship between the two around trade and of course everything to do with business at the end of it all.
I think that's really a good idea, because what really determines what because I may ask myself a question: what really made the dollar to be the overall standing currency? It was just a choice that was made hundreds of years back, whereby nations decided, okay, we're going to be trading. Let's use the dollar. So, do you know that now currently, when you've heard of the BRIC nations, Brazil, Russia, India. Actually, India is one of them. China, and South Africa, whereby actually recently they are planning to start up a reserve, their own currency, which of course threaten the Western powers. So, if such an initiative is actually very okay, whereby because Tanzania and India actually have one common aspect. I think they are both under the non-alignment movement, actually, nations in non-alignment movement. What we discussed about yesterday about the summits. How I wish those could be some of the conversations that can be put across, whereby countries can trade using each other's. It's if we decide now, because if you rely on a dollar, now imagine a mistake done by a bank in Silicon Valley is affecting you because of what? You want more money, you risk. Actually, that's why Biden was like, the consumers' deposits are protected, but the banks won't be protected because you took risks. So why? And it's not the first time it's happening. It's always going to happen. So as we, the person that we on the other side that feel the feedback, the after effect, need to think of ways like such. Countries should trade amongst themselves, whereby if India wants my products, let them get Ugandan shillings. If I want their product, India, it would be a little bit fair. That's what Russia, this whole, when Russia was sanctioned, if you want to buy Russian oil, get Russian rubles.
Okay.
Convert your money to Russian rubles.
The crisis that happened last year.
Exactly. If you say that, if I say that, I'm dictating, this is the money, let me say $1 billion ruble, convert it to the US, to get your money, convert it to the ruble. See how much you have, give me. As long as it reaches how much I have.
Okay.
That would be okay. And it worked out, despite the fact that all that, the country still prospered amidst the sanctions. So, that would be very fine. Countries starting to trade amongst each other. And through that, that's when we shall know, can we have a currency that now stands for us? After that trading amongst the currencies, we can know which is a stronger currency. We can say, okay, India's currency is okay, but maybe China, the Chinese yen has stronger. Why don't we nations in this category start to use now the yen as
the
our...
yen is actually Japanese.
The Japanese yen, like how can we make it, be standout, to be that, through that. But we should give it a try and explore these other possible ventures.
Okay.
Now, like India and Tanzania, it's quite a positive venture, and I wish it keeps up that way. You never know. The Indian, it's rupee? Rupee, yes. The Indian rupee could be probably one of the currencies that can be used in the Asian bloc, due to that constant exchange and trading throughout.
And of course, India and Tanzania decided to use their own currencies when trading amongst themselves, or when they are doing trade. That is the Indian rupee for India, and of course the Tanzanian shilling for Tanzania in that way. But of course, remember, most of the countries, while doing all these particular trade issues, apart from the European countries that use the euro, other countries have been mainly trading using the US dollar. But now at the time when there is insufficient hard cash in countries like Kenya, this becomes very hard and harsh for the business communities in there, especially those who depend on imports. Well, as we are heading into the break though, remember to invest in government bonds and of course other securities available on the Zabo platform. The markets are officially open now. It's already past 15 a.m. and of course they will be closing at 3:15 p.m. Invest in government bonds, use the USSD code *292#, register with your national identification number, kickstart your investment with just a minimum of 15,000 Ugandan shillings. The markets are open at 8:15 a.m. They are only fully closed during the weekends and on public holidays, so you can invest and be part of Uganda's investment space. Zabo, my money, my future, Altex East Africa, do something new. After the break, when we return, we are going to be heading to sports business and the latest coming in from the world of entertainment business. Good morning.